Microfinance provides financial services to individuals or small businesses that lack access to traditional banking. Let us break down how it works. At its core, microfinance is about inclusion. It serves people who are often ignored by large commercial banks. Unlike a traditional mortgage, these loans are often small amounts used to start or expand a tiny business venture. These programs often replace physical collateral with peer-based support or character-based lending assessments. While traditional banks focus on large, secured loans, microfinance institutions prioritize accessibility for those without a formal credit history. Most microloans support local retail or farming activities, helping families generate consistent daily income. The ultimate goal is to empower individuals to become self-sufficient through their own hard work. Microfinance remains a unique tool for global development. Thanks for learning with us today, and remember to subscribe for more finance basics.